Hi everyone, my name is Dania Zinurova and I'm portfolio manager of WAM Alternative Assets, which is very exciting and unique investment opportunities for Australian investors. Exciting and unique because WAM Alternative Assets is the only listed investment company listed on ASX with the ticker WMA that invests in a diversified portfolio of alternative assets. Now, let's unpack what do we mean by alternative assets, because you will find that there are often various definitions for this specific asset class. Within WMA, we define alternative assets as investments in tangible assets and businesses. The examples would be infrastructure assets such as toll roads, airports, renewable energy assets, real estate assets, all commercial buildings within different sectors, including healthcare. We invest in private equity, which I will explain what it means in more details later. We invest in private debt, in other words, non-bank lending to companies, and we invest in real assets that include a wide range of investment opportunities, such as agriculture and water rights. The main benefit of WAM alternative assets for investors is that those investments within the portfolio, they behave differently to all other more traditional asset classes and strategies. So it is a very exciting opportunity because we do see increasing demand in Australia for this type of investments. There are a number of benefits adding those investments to any portfolio. One of the major benefits is diversification. In other words, when I mentioned that those investments behave differently to other asset classes, that means that their investment returns are often less correlated to other asset classes, to more traditional asset classes. Their investment returns tend to have lower volatility. As an example, the net tangible assets volatility within WMA would be approximately 3.5% per annum versus the broader equity market index around 14.5%, 15%. And this is due specific characteristics of those alternative investments, alternative assets. They are all unlisted, so they are not accessible via ASX. Those assets and those businesses, they are privately owned. They have different valuation cycles, and as a result of that, they would exhibit low volatility in terms of the investment returns. Those investments and those assets, they also have the potential to provide inflation protection. In particular, when we talk about infrastructure assets or some of the real estate assets, and this is mainly due to their long-term nature of the contractual revenues that are in place. When we talk about infrastructure, those contractual revenues can range from 10 to 20 to 30 years. And often those revenues, they are linked to inflation. In other words, when we see annual inflation increasing, the income returns from those assets will be increasing in line with inflation. Very similar to interest rates, when we do see interest rates increasing, which has been the case over the last period in Australia, there are investment opportunities or strategies within WMA portfolio that can provide some protection against rising interest rates. And one of those strategies would be private debt. When loans are provided to private businesses, often those loans are structured as floating rates. In other words, when we see interest rates rising, again, income returns from these strategies will be rising in line with increasing interest rates. So apart from those benefits, the other exciting parts of this asset class is that it's a huge opportunity set. When we think about the size of the universe that we consider for investments in WMA, we are talking about over 2.5 million privately owned companies in Australia. This is how many companies are registered in Australia this year. This number is always growing. And so when we think about diversity of those opportunities, diversity of sectors versus other asset classes, this is where we'll find the most of those opportunities. So within WMA, we invest across different sectors, across different strategies and different risk return profiles. What's really important specifically for WMA, that this portfolio is structured as listed investment company. Why is it important? Because historically, those asset classes, they were not accessible by most of the Australian retail investors. Those investments, they require high minimum investment tickets. And usually when I think about the investments within WMA, minimum investment ticket size would start from 5 million. So to construct a portfolio that would be well diversified by investments and sectors, etc., one would require very substantial amount of capital to construct such a portfolio. Second point is that most of those investments, they are long-term in nature. When we talk about infrastructure, real estate, we are talking about assets that will be in place for 10 plus years. When we talk about private equity, generally we are talking about the investment horizon of 5 to 7 years. Again, for many retail investors in Australia, taking on that much illiquidity within their portfolio would not be appropriate. And this is where listed investment company structure comes in as a great benefit, because shareholders or potential investors, they can simply buy shares in WMA. They can trade in and out, and there is no restriction on liquidity. But at the same time, they get exposure to this great portfolio of high quality investments across those sectors. So that's the point, that many players in the Australian market, while they see the increasing demand for those assets and those strategies, they often find it difficult to address this illiquidity challenge. But at the same time, the ticket size for some unlisted structures remain relatively high. So even some of the strategies that I see available for wholesale investors in Australia, their ticket size starts with $500,000, which again is not always accessible for everyone. And I'm really excited to bring this portfolio to the Australian market, because the investments that where I deploy the capital, they are of high quality. So if we look at our private equity portfolio, we have exposure to privately owned businesses such as Healthcare Australia, which is the leading provider of healthcare labor to hospitals in Australia. We have exposure to Retail Zoo, which is a business that owns Betty's Burgers and Boost Juice that hopefully many of you would know. We have investments in companies such as Advara Heartcare, Climate Friendly, and many others. In total, the number of underlying investments within WMA portfolio is over 120 privately owned assets and privately owned companies, and we invest across all sectors. The key for economic trends or macroeconomic trends that we like following are increasing demand for food. That's a very long-term trend that we really like pursuing by investments in private equity, agriculture, water rights. It's digitalization that affects all areas of our life, of all areas or all sectors of economy. That's growing aging population, and we know some projections show this will be a continuous trend. By 2060, we expect that the aging population in Australia will double in size, and that means it will put a lot of pressure on our healthcare system. So we really like healthcare as a sector when we look at opportunities in private equity or infrastructure or real estate. And finally, it's also climate change, or I like referring to this as energy transition. That's a big focus for the Australian economy. It's a big focus for investors, both in Australia and globally. And it's a growing opportunity set within alternative assets. What I would say is that when we think about the diversity of investments within alternatives, we also need to think about the diversity of risk return profile. So when I construct WMA portfolio, I make sure that there is a balanced exposure to investments that produce predominantly income, but also build out and grow the growth part of the portfolio. And this is predominantly private equity. Why it is so interesting? Because private equity has a great potential to deliver excess returns. To put it into perspective, we know that in Australia, residential property usually doubles in value every 10 years. When we talk about private equity investments, we are talking about the potential of tripling investments within shorter period time frame, 5 to 7 years. So the usual target return for private equity investments range from 3.5 times money invested to 4.5. It's an incredible asset class that does require very specialized expertise and skills to deliver the strategy successfully. And I can give you some examples to illustrate it. One of the investments that we sold a few years ago within WMA portfolio was called Better Medical. Now, the initial private equity investment was made in 2017, and the equity was invested in a business that owned GP clinics in South Australia. They only had 6 GP clinics at the time. Within the period of 5 years, a private equity player who invested in this business helped the business growing and expanding through mergers and acquisitions, and the business was sold at 30% premium to carrying value to another global player who was active in that sector. At that time, the business had over 35 clinics across Australia. So private equity is an important driver of the Australian economy. It does require patience. It is a patient capital. It does require quite a technical, specialized expertise, but it is worthwhile looking into this area because of its strong potential to deliver excess returns. And within a WMA, you will find a lot of really exciting opportunities across those sectors, a lot of exciting stories where you look at some of the businesses and you'll recognize the names, even though they're not listed on ASX, because the universe of those assets and investments includes businesses that we use in our everyday life. So it's a very interesting area. It's a growing area. And when we think about what larger institutional investors have been doing in alternative assets over the last decade, we will see that they allocate 30 to 40% within their investment portfolios to alternative assets. So definitely deserves more focus, deserves more knowledge, and we are very excited to bring this opportunity to you and to provide more information and education on those asset classes. Thank you.